Assalamualaikum and good day to Dr. Laila and my fellow classmates. My name is Ermi Razmi Azmiza binti Ahmad Tamizi. My matrix number is 270169. Today I would like to present to you regarding the types of financial fraud and how to prevent it. Financial fraud is defined as an intentional act of deception involving financial transaction with the objective of gaining personal advantage. Fraud is both a criminal and a civil legal offense. Many fraud instances include complex financial transactions carried out by white-collar criminals with specialized knowledge and criminal intent, such as business professionals. So my purpose for this critical persuasive presentation is to create awareness regarding the financial frauds. An overview of the types of financial fraud and how to prevent it. There are many types of financial fraud. However, this three is the most common way to commit financial fraud. The first is identity theft. This kind of fraud occurs when someone uses data mining to steal your personal information, such as your name, social security number, bank account number, and credit card information. They use the information to open credit or bank accounts, which is leaving the victim responsible for all expenses. The second is embezzlement. Embezzlement is another common type of financial fraud, whereas an individual who is entrusted with property, money, or other asset misappropriates or steals such as resources for personal gain in this white-collar crime. Embezzlement frequently occurs when a person has legal access to another person's money or property, such as at employment, but does not legally possess it. This major financial crime is frequently misunderstood as a sort of a thief of property. The third is tax fraud. Individuals commit tax fraud in violation of federal law. Tax fraud occurs when an individual or corporation purposely falsifies their tax return in order to decrease the amount of money owed to the government. It's considered a type of cheating or just providing false information. Tax fraud includes making false deductions, such as misclassifying personal spending as company expenses and failing to disclose income. There is no problem without a solution. There are a few tips that we can follow to prevent financial fraud from happening. To lower the fraud risk is to do an evaluation. A true examination, whether undertaken internally or by a certified third party, will aid in the detection of any weaknesses that could be exploited by fraudsters. Safety procedures and protocol as well as training in the workplace must be examined. Next is to educate your employees on the dangers of fraud. Regardless matter the size of your financial institution, understanding bank fraud is critical. Everyone in the company must be aware of the dangers of fraud and the various ways it might occur. In today's world, having updated training, software, and a cyber security team that can provide layers of protection for your facility and consumers is critical. Every 6 to 12 months, employees should receive continuous training. This will remind them of the importance of fraud detection and prevention. It will also ensure that any new hazard that emerge can be included to the employees' training. Cybersecurity also needs to be improved. Not only must the system ensure that the data is safe from outside attackers, but they must also ensure that those who access the data are truthful about their identities. In the event of unusual behavior on a customer account, several institutions are combining stronger cybersecurity with traditional methods of contacting them. It is also important to keep track of transactions. There should be warning for anything that seems out of place or exceeds a specified dollar amount, whether the transactions are coming into or leaving the financial institution. The impacts of financial fraud. Financial fraud has brought many negative impacts either to individuals or the public body. One of the negative impacts that can be seen is from humans themselves. Fraudsters siphon money from payments and programs, causing victims to miss out on critical service and support. Because program funds were not used for their original purpose, the intended recipients may miss out on possibilities. People who are victims of public sector fraud might experience substantial psychological and emotional problems in addition to financial losses. Shame, embarrassment, distress, despair, and worry have all been mentioned as emotional response experienced by fraud victims. People who are victims of public sector fraud face social issues such as loss of reputation, feelings of vulnerability, isolation, and exposure. Fraud can have a negative effect on the victim's mental health, leading to anxiety, sadness, and even suicide. Not only that, dealing with banks, insurance companies, utilities, police enforcement, and consultants can result in trauma and increased costs when dealing with fraud. Other than that, financial fraud also can cause market distortion and competition. Engaging in fraudulent behavior can provide fraudsters a competitive advantage. This can lead to real competitors being priced out of the market, going bankrupt, and eventually closing operations. The fraudster may be able to gain a monopoly on the market. In the meantime, the industry integrity is jeopardized. It's because widespread fraud has the potential to jeopardize the entire industry credibility. Legitimate enterprise can be tarnished just by being a part of an industry, causing the government and the public to lose faith in their integrity and capacity to offer services. Next, financial fraud can threaten the organizational safety. Fraud can jeopardize the security of private and non-profit organizations. This can lead to national security compromise, such as when fraud involves identity theft or when there are ties to government service or networks. Furthermore, when trustworthy insider is exploited by severe and organized crime groups, or when innocent people are compelled by this group, organizational and personal security might be jeopardized. In my opinion, the financial fraud is a threat to the international financial system. Why I say that? Because in the financial system, there is no definition of financial stability. The asset price and interest rate can be turbulent even in a stable financial system. Banks and financial enterprises can collapse, investors can lose money, and borrowers can default. Instead of prioritizing stability, which is the prevention and management of systemic cycles that might severely damage or shut down the economy, policymakers accept such failures. The financial system performs a variety of tasks, including payment and settlement facilitation, credit allocation, risk transfer, and liquidity provision, as well as maturity transformation and price discovery. Financial instability can result from a significant deterioration of any of these basic processes. As a result, financial stability authorities are concerned about the ways in which financial markets and institutions can transmit and amplify shocks from any source. Thus, these vulnerabilities have been concerned since years ago, as deep recession, deflation, and protracted periods of poor growth and unemployment have all resulted from these vulnerabilities. That's all from me. Thank you.